Live from London, this is Bloomberg Daybreak Europe. I'm Bonnie Quinn with your top stories. Stocks in Asia head for their best February ever, with Korea's Kospi up close to 20% on the month. Netflix bows out. The streaming giant folds in the race to buy Warner Brothers, clearing the way for the rival bidder, Paramount Skydance. Plus, a setback for Starmer as the UK Prime Minister's party finishes third in a special election, losing one of its safest seats in Parliament. So let's have a look at those markets. We arrested those gains in the US yesterday, and it looks like we might be pointed lower once again today for the S&P 500. We were down about 0.5% in yesterday's session after 2 fine days of gains, so that's put us back into the red on the year. The 10-year yield below 4%. Look at that. We are creeping ever lower. We're still in that range of 375 to 425, but of course it's an anchor figure, right? 4%, so dipping below that is pretty significant. And then a little bit of strength for sterling after that by-election result. So yes, maybe some relief that the Greens won and Reform didn't, but obviously a huge setback for Keir Starmer's party. An interesting thing to note, Citi today is saying that it's done a huge survey of fund managers, and it's finding that managers are putting money to work in emerging markets even after this huge rally. So that could create more momentum for emerging markets, even as developed markets continue to spend and those yields in some of those spenders are going ever lower. Risk events on your agenda today. We have IAG earnings coming out at 7 a.m. We'll be looking at margins and guidance, obviously, on buybacks. Then from 7:45 UK time, we'll be looking out for Europe's preliminary CPI for February. Then 1:30 p.m. UK time, we get the US PPI for January. We should see a little slowdown, but those components that feed into the core PCE might see some heating up. A little bit of breaking news now. We have a big miss from BASF, the chemical maker, seeing 2026 adjusted EBITDA coming in at 6.2 to 7 billion euros. Now, the estimate was for that to come in around 7.22 billion euros. So a massive miss there for BASF. Now, it's important to note shares are up 12% year to date. So we'll see what they do after that miss. I'll tell you where shares are also higher, and that is in Asia. The stocks in Asia across the board really are on track for their best February on record. So let's go straight to Tokyo for an update from Winnie Su. Winnie.
Yeah, morning, Bonnie, and happy Friday. We are ending this weekend as well as this month on a pretty positive note in Asia, as you just mentioned. Yeah, it really is on that AI demand for hardware and also a weaker dollar. And hence, overall, it is a green picture across the board. However, Kospi here is a bit of an outlier. We did see that Samsung Electronics down a bit after that note from IDC mentioning how the overall smartphone market may shrink about 13% due to this ongoing memory crunch. However, it is really hard to look away from that overall stellar rally of the South Korean market as you flip aboard and see how it has really performed so far this month. You can see that February up about 20%, and that is actually making it the top performing major stock market in February versus the S&P just about trading flat and in fact headed for its worst month since April. Now also flip the board as we take a look at what's going on in Japan, where we are. In fact, we are seeing the topics outperforming the Nikkei 225, helped by the trading companies, and investors are really looking forward to that Berkshire annual shareholder letter expected this weekend. In terms of the Japanese yen, you're seeing strengthening just a little. We did have the Tokyo inflation easing, but less than expected, and the 2-year bonds actually holding on to its gains, with that bond auction passing quite smoothly. When it comes to the Chinese asset, flip aboard and take a look at what's going on in terms of the yuan specifically. We are seeing it actually snapping 10 days of gains after PBOC cutting the cost when it comes to betting against the currency, essentially a tool to slow down the appreciation of the yuan against the dollar. And the overall stock market quite sluggish, but we are waiting for that important MPC meeting due next week. Back to you, Bonnie.
Winnie, thank you so much. That is Winnie Su in Tokyo. Netflix has dropped out of the battle to buy Warner Brothers, clearing the way now for Paramount to clinch the deal. Shares in the streaming giant soared in after-hours trading while Warner's slid. Let's bring in Manuel Maigori, Bloomberg's deal reporter. So Netflix opened with this deal. It's now decided to withdraw. It's saying that it's no longer financially attractive. Is that the reason? Should we take them at face value, Manuel?
Yes, Bonnie. Yeah, I think so. I mean, companies at some point need to draw a line, and especially on these bidding wars, right? They need to be disciplined, and at some point, increasing the offers start making no financial sense, and this was the case for Netflix. I mean, Paramount had a lot of firepower. They came back and forth with several sweetened offers over the last few months, and they were also the ones that started this off a few months back, right? So whereas Netflix had reached an agreement back in December, yet Paramount had a lot of dry powder to come back with more offers, and in the end, Warner Brothers, deemed that this latest offer at $31 a share was superior to the one from Netflix. So new chapter on this saga, Bonnie, has kept us real busy. Now we'll see what comes next.
Manuel, just on Netflix, it's rallying big on the news, obviously, because it's not going to be shouldered with debt and so on, and a whole integration process. But at the same time, while it might be short-term good for the stock, is it long-term good for the company that it's doubling down now on its own content instead of integrating a Warner Brothers, let's say?
Yes, definitely, Bonnie, you made a very good point. I mean, definitely a potential integration with Warner Brothers would have created a gigantic company, right? Would have created a lot of content all of a sudden for Netflix additionally. But at the same time, they have been very vocal about the idea of continuing to grow organically and invest heavily on new shows, new content. And why not? There are potentially other potential opportunities, new targets that may come to market down the road. Obviously, Warner Brothers was a very unique kind of once-in-a-lifetime opportunity out there, but there will be others potentially down the road. And now everybody knows that Netflix, could potentially acquire other companies too. So we'll see how the next few months and years play out for sure. But for the time being, they will probably focus more on organic growth.
So presumably it'll be a pretty smooth regulatory process for Paramount Skydance. Obviously, in the good books at the White House, that can't hurt at the very least. Is there anything that could come out of the woodwork that might surprise us now about the rest of this deal process?
The answer is yes. Bonnie, these transformative deals tend to attract a lot of scrutiny from regulators. Politicians have been already very vocal in Washington, and they will continue to be so over the coming months until this deal completes. So we are expected to see a lot of opinion, a lot of people coming and weighing on the consequences, ramifications for consumers and for the industry over the coming months. So we'll see. I mean, it's still early to call it, but usually these big transformative deals tend to have a little bit of a bumpy road towards approval.
All right. Well, we'll see market reaction in a little bit. Bloomberg Deals reporter Manuel Maigori, thank you. Prime Minister Keir Starmer's ruling Labour Party has lost a formerly safe seat in the UK Parliament, finishing third behind the Green Party and Reform UK. Let's get more now from Bloomberg opinion columnist Rosa Prince. Rosa, talk us through the significance of this special by-election in the Manchester suburb of Gordon and Denton.
Yes, such a potentially consequential by-election. Basically, we have seen that the Labour Party, which has been governing for just over a year and a half now, is in massive trouble across the country. If they can't hold on to seats like this in their heartland in Manchester, then they really are in trouble everywhere. And what we're seeing is that they are at threat not just from the right of the spectrum, which we knew already from Nigel Farage's Reform UK, but also now from the left. The Green Party, not so much a traditional Green Party worried about climate change. They're very interested in issues to do with socialism, wealth taxes, international politics, such as the situation in Gaza. And Labour MPs will all be worrying that if they could lose this constituency, won't they lose theirs now next time around?
It will have been a boost to Reform as well to have come in runner-up, right? Labour was third in this election, and as you say, a very divisive election. So are there any lessons to be learned for, say, Greens or Reform when it comes to what makes people turn out? I mean, it was a 48% turnout. It was quite high.
Yeah, I think what it does is confirm this idea that we've been seeing for a while now, that two-party politics in the UK is over, that we are into a world of five-party politics. That's the traditional Labour and Conservatives, now Reform, the Greens and the Liberal Democrats. I don't think it was an entirely good picture for Reform. I think what we saw is that there's something of a ceiling on their support. They probably shouldn't have expected to win it, but they like their chances there. And their candidate was quite polarising. And what they've seen is that there are a lot of people who really dislike them, and they are looking for the party that can stop them. And in Manchester, that turned out to be the Green Party. So one lesson for them is that they're going to have to see how they can widen their appeal. As for the Greens, they told me, I was in Gorton and Denton last week. I chatted to the candidate, and she told me that she thought that what had stopped the Greens being a national party in the past was this idea that it was a wasted vote to vote Green, that they couldn't win nationally. And now that's been exploded out of the water. This was not a target seat for them. They did not have infrastructure. They didn't even have any local councillors representing that seat. And now, all bets are off for them, and they will really be gunning for the Labour Party and hoping to break through on quite a big scale.
Yeah, so just another huge blow. Where does it leave Keir Starmer's government at this point?
Great question. And also, where does it leave Keir Starmer himself? Now, as I said, those MPs will be really spooked at the idea that they too could lose their seats. And Keir Starmer has been saying for a while, we need to steady the ship. We need to just go on. So he may have a leadership challenge coming down the track yet again. And the other thing is that I think it really upsets their strategy. For some time, they have been kind of facing to the right and thinking about reform and worrying about reform. Now they're going to have to worry about their left flank and those MPs in the party who are saying, come on, we need to offer something to people on the left, perhaps leaning left economically, putting through some of those policies that they like scrapping student tuition fees. Students really like the Greens. Their voices are going to have to be heard. And so we may see the whole direction of the government tilting towards the left.
All right, Rosa, thank you so much. Bloomberg opinion columnist Rosa Prince there. And I want to point to the pound sterling because we did see some strengthening after that vote came in. We're just shaving a little bit of those gains off, but it could be an indication that, the market likes certainty. So now we know what the direction is for Labour potentially, but also just in this particular by-election. And also perhaps the fact that Reform didn't win or didn't get even closer. It did come in second, though. So sterling trading now at 134.87. Still ahead, I'm going to be speaking with the CEO of a tube maker, Vallourec, after it reported earnings. But first, no nuclear deal as of yet, as US and Iranian officials conclude the latest round of talks in Geneva. More on the way. Those details next. This is Bloomberg. To Bloomberg Daybreak Europe. US and Iranian officials ended the latest round of nuclear talks in Geneva yesterday with no new deal. The two nations, however, agreed to reconvene as soon as next week as President Trump continues to amass military forces in the region. Let's get more from Jumana Bersetchi, Bloomberg Horizon's Middle East and Africa anchor. Jumana, what is the latest? What did we learn from yesterday's talks?
Well, it was a long day of talks, quite fraught with an intermission in the middle with reports and Bloomberg reporting this as well as other outlets that the U.S. side were disappointed with some of the options that Iran had presented. That being said, at the end of the day, the mediator, Oman, the foreign minister there put out a statement saying that talks will reconvene again in Vienna next week. Technical talks, again, this is a question, but maybe with the participation of the IEA, since they are actually situated there. And the Omani mediator also citing, quote, significant progress, also echoed by the Iranian foreign ministry as well. That we haven't had formal comments come through from the US, but what we do understand from earlier on in the session is that they were not utterly pleased with what the Iranians had presented. Now, Wall Street Journal had also reported that the U.S. were insisting on 3 criteria: the full dismantlement of 3 main nuclear sites, the Iranians to deliver their already enriched stockpile of highly enriched uranium. So that is, sitting on about 400 kilos worth, unknown whereabouts. The U.S. are insisting on them handing it over. And then the third point is that if they do agree to terms of little or low or no enrichment, even, we don't know at this point, they would stick to those terms indefinitely as opposed to having a sunset clause, which was a key clause in the JCPOA deal that Obama agreed. On the Iranian side, they're still heavily pushing for sanctions relief, but the U.S. seems to be pushing back and saying that unless the Iranian side actually agree to adhere to all of the criteria, it's unlikely that they're going to get the full substantial sanctions relief that they've been pushing for. So still a lot of topics to sort of iron over the next week, but at the same time, the region is still on high alert for the potential, of course, of that military action.
Yes, and it did seem like the U.S. added in some clauses that perhaps Iran wasn't expecting, or at least that we weren't expecting to hear. Now, you mentioned military action. It's still on the table, I guess, Jumana, but is it at least pushed back, the potential for military action?
Yeah, I think that is the hope. Obviously, going into the weekend, tensions are high. President Trump gave that ultimatum of 10 to 15 days. But actually, if you work it out in calendar terms, as the period between March the 1st and March the 5th. So perhaps straddles the weekend. Typically, we know from history that if action does happen, it tends to happen over the weekend as well. And then all of the military buildup, the buildup of assets around the region would suggest that military action is still on the table. That second aircraft carrier, the Gerald Ford, has now reportedly left Greece. It's left Crete. It's on its way to Eastern Mediterranean. So it will be situated where they want it to be. And actually, yesterday, the Israeli government confirmed that their territory is being used for F-22 fighter jets and also refueling planes as well, which is not customary, of course, for a country to play host to another country's military assets. So this is a situation we're in. I think, as we head to the weekends, and you can see it in the way oil is trading, tension still on high alert about the real possibility of kinetic action, though unclear at this point, once again, whether the Trump administration could opt for limited military action and a one-off strike, or a sustained or protracted period of strikes on Iranian soil.
Jumana, take us through the energy market reaction. Sure, there might have been a massive reaction to one day of talks. No one was expecting maybe any huge breakthroughs, but we have seen a reaction in energy markets to the past several days of rhetoric.
Yeah, that's true. And over the course of this month, oil is actually up around 8%. And a lot of that is down to geopolitical premium. I don't think anyone would think that the fundamentals would justify Brent trading at around $71 here. Actually, over the course of this week, we are trading a little bit weaker because, as you say, maybe a bit of relief that the negotiations are still taking place, that there's another round of negotiations taking place in Vienna next week, which puts the imminent threat off the table. But we do know from, if you look at hedging activity and take a look at this chart here, investors have been protecting for an upside surprise in oil, so buying those short-dated options, and you can see it very pronounced in the one-month tenor, i.e. investors are accounting for the possibility of something happening in the next couple of weeks as opposed to over 3 months or 6 months. It's more pronounced there. And then you look at it in terms of the export volumes as well. The data would suggest that Saudi Arabia has been bringing forward a lot of the sales of its export to some of those Asian economies. And then looking at some of these storage numbers as well, the Iranian floating oil storage has massively spiked up as well, which also indicates that they perhaps are readying themselves for something to happen. But the big question mark, of course, here, Vani, is if Iran should choose to retaliate. In the past, the way they've retaliated has been by avoiding oil infrastructure. But this time around, there's always that option of closing up or causing a significant amount of disruption on that main choke point, which is the Strait of Hormuz. So as long as that threat continues to linger over the market, that's the reason you're going to see this geopolitical premium continue to be priced in to where oil is trading. One other thing I would say, and this is going underneath the radar, there is an OPEC Plus decision coming up this Sunday. Unlikely that they'll change or modify their output targets, but something to watch out for as we walk in on Monday morning as well.
All right, Jumana, as you say, everyone on high alert here. Our appreciation, Jumana Bersetti, Bloomberg Horizon's Middle East and Africa anchor. Coming up, negotiators from Ukraine, Russia and the US set for talks in the UAE. Details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now to some other top stories we're following this morning. Ukraine's president says the next round of negotiations between Ukraine, Russia and the US will likely take place in Abu Dhabi in early March. Volodymyr Zelensky says the trilateral talks should finalize security guarantees and prepare future leader-level meetings. The International Monetary Fund has approved a 4-year financing program for Ukraine worth about $8.1 billion. The IMF's executive board greenlit the deal, allowing for the immediate disbursement of about $1.5 billion. The decision should be a relief to Ukraine amid difficulties on the battlefield and U.S. pressure to make concessions in peace talks with Russia. Bloomberg understands that the Trump administration is easing fuel shipments to Cuba's private sector to make it more reliant on the United States for supplies. Sources say energy companies are being reassured they can sell oil to private Cuban SMEs, and the resale of Venezuelan oil to Cuba will be authorized. The plan is continuing to take shape, but tensions are running high after Cuban authorities shot 10 exiles on a speedboat off the island's coast. Former U.S. Secretary of State Hillary Clinton has denied ever knowing the convicted pedophile Jeffrey Epstein. Giving evidence to congressional investigators, Clinton accused them of wasting time on fishing expeditions and said President Trump should be forced to answer questions under oath. The former President Bill Clinton will testify later today.
I don't know how many times I had to say I did not know Jeffrey Epstein. I never went to his island. I never went to his homes. I never went to his offices. So it's on the record numerous times.
All right, let's take a look at these markets as we head into the Friday session. It has been a fascinating month and nowhere more so than across Asia. If we look at the MSCI Asia Pacific Index, you can see a huge outperformance. Now, that's not just the last couple of days. Obviously, semiconductor memory stocks ripped, particularly in South Korea. But it's really been across the whole month. We're up something like 20% on the Kospi, which is really just a phenomenal performance. And it looks like it could continue, with Citi saying that fund managers are adding to emerging market positions. Now, that's the MXAP. But if you look at the 10-year yield in the United States, we are below 4% as well. That's a little bit of an indication of a safety trade, potentially. Also, the idea that we're still at sea when it comes to data and Fed leanings. So that 4% breach is pretty significant, even though we are still in that range of between 375 and 425. We have turned negative now on sterling after that nice bounce after the by-election result. Let's take a look at some other assets on the move. So oil a little bit higher. Bitcoin after that nice bounce is maybe setting up for a nice bounce again today. And gold continues to be near its record. Coming up, we'll look at how the markets are ending the week with Lauren van Biljon. from London, this is Bloomberg Daybreak Europe. I'm Bonnie Quinn with your top stories. Stocks in Asia head for their best February ever, with Korea's Kospi up close to 20% on the month. Netflix bows out. The streaming giant folds in the race to buy Warner Brothers, clearing the way now for rival bidder Paramount Skydance. Plus, a setback for Starmer as the UK Prime Minister's party finishes third in a special election, losing one of its safest seats in Parliament. Well, let's have a look at these markets. We'll start with the pound, in fact, because we saw the pound bouncing after that election result. A little bit of certainty for the market, no doubt. We've changed now. We're a little bit lower relative to the US dollar. Markets move on pretty fast, but also a lot of uncertainty in the future. Does this have consequences now for Keir Starmer's government? So that's going to be next on traders' radars. Also, we're seeing this 10-year yield bid, right? So the yield below 4%. Treasuries absolutely bid. It's a haven trade going into the weekend with all of this geopolitical uncertainty. The Iran talks finishing without any kind of real conclusion, except that they'll meet to talk again next week. And then futures on the S&P 500 pointed lower. We did have those declines yesterday on the S&P, down about 0.5%. Nvidia failed to deliver perhaps, the enthusiasm that the market was hoping for in terms of an injection to sort of get rid of all of the bad feeling about AI taking over jobs and perhaps, creatively destroying companies, and that really arrested the 2 days of gains that we saw midweek, and we are now back negative on the year for the S&P 500, and also we're down 2% on the year now for the Nasdaq 100. All right, it's time now for your front page news. The Financial Times leading on the Greens winning a key UK by-election in a blow to Labour. The loss is a severe setback to Prime Minister Keir Starmer. The Guardian also splashes on the Green Party winning the Gorton and Denton by-election, pushing Labour to third place. Again, a blow to Keir Starmer, yet another one. And finally, the Wall Street Journal has this exclusive story on the Federal Reserve mounting a closed-door fight against the Justice Department subpoenas. It all comes as U.S. Attorney General Jeanine Pirro is investigating testimony from Chair Jerome Powell provided last summer around building renovations, a probe he has called improper. And you can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DayBGo. Anthropic has rejected the Pentagon's latest offer to defuse a standoff over conditions the company has sought, governing the use of its AI software by the military, escalating the standoff between the two parties ahead of a government deadline. Let's bring in Bloomberg's Washington Deputy Bureau Chief, Laura Davison. Laura, we have a few hours left, but it looks like Anthropic is now standing up for itself again. What's likely to happen next?
It is really unclear. The Pentagon has set this 5 o'clock East Coast deadline for Anthropic to acquiesce and essentially say that the U.S. military can use its platform however it would like. The company came out just a couple hours ago and said they cannot allow the Pentagon to do that in good conscience. The two things that they really want restrictions on are, one, surveillance of U.S. citizens, and two, having the AI platform conduct lethal strikes without the involvement of a human. They said, look, that is just not safe. We don't know exactly how the platform will respond. We want those guardrails. The Pentagon shot back and said that that the U.S. military alone should be able to control the tools that it has, and it shouldn't be up to a private company. This is a standoff that has been brewing for days, but really intensified. And the threat that we'll see, come this deadline, if the Pentagon acts upon, is to label Anthropic a supply chain risk. That is a label that is essentially usually reserved for companies that are owned by adversaries, Russia, China, for example. That it would essentially remove Anthropic from being able to be used by the broader military system, including other contractors like Lockheed and Boeing, for example. The other threat, which is slightly less severe, would be to invoke a 1950s era law, the Defense Production Act, which would essentially allow the Pentagon to just assume the platform, use it how it would like, without Anthropic's input on this matter.
Yeah, it's fascinating. I mean, the FT is going so far as to report the US has said it will axe all Anthropic pacts without a Pentagon deal. Who would be the likeliest loser in this? I mean, I guess Anthropic would take a big hit.
This would be a blow to Anthropic in terms of its government contracts, though lots of folks have also pointed out that this would be a big loss to the U.S. government, and particularly in an AI race with China and other countries. That the Claude platform that Anthropic produces is one of the most advanced. It's the one that the Pentagon has been using for the longest. Just abruptly removing it from all the systems would mean a huge blow to U.S. military capability.
All right, Bloomberg's Washington Deputy Bureau Chief Laura Davison, thank you so much. We'll keep an eye out for 5:01 Eastern, which is the deadline for Anthropic. Joining me now is Lauren Van Biljon, Senior Portfolio Manager on Plus Fixed Income Strategy at Allspring Global Investments. Lauren, there's a lot to talk about fixed income-wise, but I do have to ask you about all of the plots that just keep thickening around AI. I mean, is that going to be the dominant narrative that moves markets over the coming months and years?
Absolutely. I mean, it's certainly something we're spending a lot of time talking about internally. And it doesn't really matter if you're looking at sovereign bonds or corporate bonds or equities. There are going to be changes coming from AI. And maybe in the sovereign space, it's more around the productivity gains we can get. Maybe that's good news for governments. But certainly something that we're all spending plenty of time thinking about.
And it's really amazing. It's so obvious in the US right now how the relationship between governments and corporate America is changing, right? So the government taking stakes in some companies, trying to set up a sovereign wealth fund, also, having opinions on how companies should govern themselves. I mean, does this make the US less investable?
I think we're seeing that, like you say, that kind of more assertive form of governance. I think we're seeing it globally. We're seeing governments, not just in the US, but more broadly, right, take more of an interest in where monetary policy is, and perhaps offer opinions around what central bankers should be doing. And then that governments have always had that strategic view on the economy and the makeup of it, but seem to be getting confident around getting more assertive. So I don't think it's unique to the US. Perhaps the US government, obviously given the depth and size of their market, can be a bit bolder, but it's certainly not unique to the US right now.
Yeah, that's such a good point. Lauren, I have to ask you about the 10-year going through 4%. It's been threatening it. We've seen the 10-year yield creep down over the last several days, but it certainly does seem like a little bit of a monumental move, given that 4% is such a round number. What do you make of it? Is it a safety trade?
Yeah, it is. It is big, isn't it? It's just threatened it for repeatedly. Bounced off, come back, thought about it, come back, and now this morning went through. If it can hold this move, it does suggest that yes, we could see some lower end treasuries. At Allspring, we have been looking at adding a bit more duration in US and other sort of developed markets. To us, there are sort of downside risks to inflation for this year. So that could open up the path to a sort of easing cycle that the market takes as a very positive thing. And so maybe you're seeing steeper curves this year again, but perhaps it's bull steepening rather than some of that bear steepening we saw last year.
Lauren, do you anticipate that it will continue to decline, this 10-year yield, and as you say, even further out the curve? What would cause that to happen? What would be the catalyst? Would be, the concern about spending?
Well, I suppose to answer your first question first, yes, we could see the move continue. If the market has that momentum behind it, if inflation concerns are perhaps not as pointed, the market seems a lot calmer around the future makeup of the Fed and sort of that policy interaction. But all of those factors could keep bonds on the front foot and keep yields sort of moving lower. I think if we do see that renewed concern around the fiscal side, it's far more that long end, right? That 15, 20, 30-year part of the curve that would react there. In the short term, more spending might not be great for the budget, but it could help support growth.
Now, we've been talking a lot about emerging markets. I know that you see plenty of opportunities in emerging market debt. Would you be taking some money off the table in, say, developed markets in order to put it to work in emerging markets still, or how would that work?
Yeah, I think you can. Emerging markets have had a fantastic run in 2025, but I don't think the story is over yet. They look perhaps on the more expensive side if you compare them to developed markets versus sort of a recent history. But I think if you take into account the improving fundamentals, that there's still quite a lot of value there. I think you need to be more strategic around names. It's not sort of a blanket buy EM and don't look at it for 6 months. But some of the high yielders, there's great idiosyncratic stories that I think make a good case for investors to be involved in. How you fund it?
All right, Lauren.
I think that can vary by strategy and sort of where your base is, but there's plenty of options.
I'm afraid we have to leave it there. Lauren, thank you so much. Lauren van Biljon is Senior Portfolio Manager at Allspring Global Investments. Coming up, we're going to be speaking to the Vallourec CEO, Philippe Guillemot, after the company reported better than expected fourth quarter revenue. That interview next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now to some corporate news. Bloomberg has learned SAP's new bonus system has ended up rewarding underperforming managers while holding lower-ranking workers to higher standards for their payouts. We're told the changes prompted an outcry from employees and leaders at the German software company, and the company has since set aside millions of euros to improve the new system. UBS has nominated Augustin Carstens and Luca Maestri for election to the board at the 2026 annual general meeting on April 15th. William Dudley and Jeanette Wong will not stand for re-election. IAG has announced plans to pay an annual dividend of around 448 million euros and buy back 1.5 billion euros of shares this year. The owner of British Airways says the move reflects its financial position and long-term outlook. It's set to report full-year earnings shortly. The chief executive of IAG will be on the opening trade just after 8 a.m. London time, so do tune in to that. The tube maker Vallourec has reported fourth quarter revenue and EBITDA that came in above estimates. Joining me now, I'm pleased to say, is Vallourec CEO Philippe Guillemot. So congratulations, Philippe, on the top and bottom lines. Curious about the guidance, though. Perhaps you would have liked to maybe come in at the higher end of street estimates. You did provide a range, but what is holding guidance back?
Yeah, first, thank you for having me today with you. Well, first, I would like to reiterate that 2025 was another transforming year. For the third year in a row, we are above 20% EBITDA margin. We have 13 quarters in a row with positive cash flow. And thanks to this performance, we are announcing a significant increase of return to shareholders. We target 650 million euros, including an interim dividend to be distributed in August of 1.75 euro per share, an increase of 25 cents per share compared to last year. And all this is possible because Vallourec is now very well positioned and more positioned to address the challenges of the world energy of today and tomorrow. And we continue to reinforce this positioning through our investment in the US on our high-torque connections for the unconventional oil field. We have integrated our first acquisition in 9 years in Brazil to double the value we can deliver on our line pipe business. And we invest in advanced and enhanced geothermal technologies, which seems to be having a great future given the high need for electricity of the data centers. So coming back
yes, you're essentially global. 40% of your revenue comes from the United States, but you're all over the world, essentially, Philippe. So I'm curious, where are you seeing companies hesitate and where are they quite happy to spend in the knowledge that future growth is there?
Yeah, first we have, as you said, a strong presence in the US. I remind you that 100% of what we sell on the onshore business in the US, we make it in the US, from steel to finishing of the pipe, so which is obviously a unique positioning in today's world with the tariff. We have obviously a strong footprint in South America with Petrobras being a key customer to us, and with which we have signed a long-term agreement with a potential sale of $1 billion in the next few years. And we have a strong presence in Middle East, where after a slowdown in H2 last year, we have seen activity picking up since the beginning of the year, which should translate in higher volume in the second part of this year.
You're working with Baker Hughes. You're also working with Shell on subsea oil and gas projects. I'm curious, are you looking at Venezuela at all and talking to anybody involved in trying to restart Venezuela's oil industry?
Yeah, we used to be years ago in Venezuela. The market may reopen. And now with our plant in Brazil, into which we have invested a lot in the last 3 years, we are uniquely positioned to deliver the pipe which could be needed in Venezuela, pipes which are, I think, what we call sour service, so fit for mission in a very highly corrosive environment, which is the case of the onshore oil field in Venezuela.
Have you been talking with any U.S. companies for provision of certain tubes or what they might need for, hydraulic reasons?
No, we have been talking with our customers in the U.S. You're right. I think we will deliver from Brazil, but it's our commercial team in the U.S. which is in daily contacts with our customers in the U.S. to discuss their plans in Venezuela.
Shares are up 25% year to date. You're obviously rewarding shareholders, as you said yourself. How do you keep this outperformance going, Philippe?
I think it's innovation, staying very disciplined on our value over volume strategy, operational excellence. I think we keep obviously improving our operations. And with the footprint we have today, we are much more flexible than we were in the past. And even though volume may go up or down, we're able to protect our margin by adjusting our cost base, which you see quarter after quarter.
So how has your business model and maybe your outlook changed since President Trump took office? Are you concentrating more on manufacturing in the United States, which you very prominently said you absolutely do earlier on?
Yes, we do it. We innovate too. We have developed new connections, so-called high-torque connections, because our customers now are able to produce more oil with less wells, thanks to productivity gains, which are made possible thanks to our technology. These laterals are longer and longer, and that's why they require this high-torque connection. And that's the reason why last November we have inaugurated a new investment, $48 million, new threading line in our plant in Youngstown, Ohio.
Philippe, who is spending? We've gone through a period of huge volatility for energy prices, whether it be natural gas or oil. And, there's been a lot of uncertainty, geopolitical uncertainty and otherwise. So who's taking the risk out there?
No, yes. First, the world needs more and more energy. And you've seen recently that with all these new data center in construction, the world needs more and more electricity, and you need primary energy to produce electricity. And the fastest way to bring electricity is gas turbine. So there is a need for more and more gas. Today, to extract oil, you need to switch more and more to unconventional, for which we have developed technologies. And on top, you have geothermal, which has become a very key base energy, a source of electricity. And we have been working with companies developing new concepts, so-called enhanced or advanced geothermal technology, leveraging all the know-how we have acquired in oil and gas to design the wells that will be able to lower significantly the cost per megawatt of the electricity that can be produced by geothermal, but geothermal being a base load, which is key for the data centers.
All right, Philippe, we have to leave it there, but congratulations on the quarter. Looking forward to speaking to you again next quarter. Vallourec CEO Philippe Guillemot. And some other corporate headlines now. CoreWeave shares slumped in late trading after reporting a bigger than expected loss and boosting capital expenditure. CoreWeave says this year's capex will come in above estimates at around $30 to $35 billion, adding to concerns that it might be overspending on infrastructure. Meanwhile, shares in Dell jumping in extended trading. That's after the company gave an outlook for sales of its artificial intelligence servers that exceeded estimates. It's a sign of robust demand for machines, helping fuel the AI data center build-out. The company will generate about $50 billion in AI server revenue in the current fiscal year, which ends January 2027. Shares of Block closed higher in the US after it moved to cut its workforce by nearly half as it bets on AI changing the future of labour productivity. Block, which was founded by Jack Dorsey, has invested heavily in AI tools to run more efficiently. The company has been restructuring its business model and staffing since 2024. Plenty more coming up. Do stay with us. This is Bloomberg. We've come to another very eventful weekly close here in London, and I just wanted to point to some charts showing what exactly happened with NVIDIA. So Samsung beating NVIDIA wildly on memory. If you just look at those green lines, they're just rising, to the moon. That's also helping the Kospi. And we saw that it has nearly a 20% gain in the month of February, and Korea's indices are just performing hugely well. So we'll have to keep an eye on memory for NVIDIA as well and what that might mean for quarters forward, because if we take a look at the next chart, we'll see that NVIDIA lost $260 million of market capitalization yesterday. That's the biggest loss in one day since all the way back to March 3rd. There haven't been many days like that for NVIDIA. And sure, it was a 5.5% move, right? It's maybe not huge in the scheme of things, and it can be a pretty volatile stock. Nevertheless, that's another metric to watch out for, obviously. And then I just wanted to point to the 10-year yield, because we did finally break through that 4% mark. We've been waiting for that to happen. Really doesn't matter that we broke through 4%. We're down a few basis points. Still, it is a round number, and it is something that, people anchor to, right? So once you break through 4%, is there more to go? So it's on pace now for its worst month since February of 2025, so more than a year. We're down 23 basis points. We had that huge move earlier on in the month, and then we've been creeping lower ever since. All right, let's take a look at the risk events on your calendar. 7 a.m. we get IAG earnings, so we had a little bit of a preview there, but we get the full earnings coming out in just a little while. And then from 7:45 a.m. UK time, we get Europe's preliminary CPI for February. We're going to want to take a look at those data. 1:30 p.m. local time, we get US PPI for January. Now, we are expecting some of the headline numbers to come in cooler, but those that feed into core CPE, which is, of course, what the Fed cares about, well, they might be hotter. Our new show, Bloomberg This Weekend, launches tomorrow. David Gura, Christina Ruffini and Lisa Matteo bring you unique conversations and in-depth interviews on news, politics, lifestyle and culture. Do watch and listen on Bloomberg TV Radio and the Bloomberg Business app. That's Saturdays and Sundays from 12 p.m. UK time. And next week, we'll have special coverage of the UK Chancellor's spring statement. Join us Tuesday for that. The opening trade is next.